Every trader starts the same. Maybe they're just getting started or they're coming back to the markets after a long break. First week, or maybe a couple of weeks, or maybe even a month goes pretty well. But eventually, they're back, stuck in the same cycle of small wins, bigger losses, and no real progress. Even the people who genuinely want this, who are really serious about their trading, who show up and do all the right things, even they still keep struggling to gain consistency. But here's the kicker. It's usually not because they lack knowledge or strategies. If you're a returning viewer of this channel, good to have you back. And if you're somebody who's new on this channel, welcome. My name is Shaun. I'm an active US equities trader. I've been trading the market since 2017. And on this channel, we talk all about trading and investing the right way in the US stock market. So if you're interested in learning how to trade and becoming a profitable trader, consider subscribing. And while you're at it, might as well hit the like button. But without taking too long, let's actually go on to the very first reason that traders struggle with consistency. And the very first one is they lack a rock solid trading process. Traders really want profitability and consistency in their trading, and they want to execute like profitable traders. And they generally believe that they're very close to it. But here's the challenge. They believe or they think that they have one single trading strategy or one single trading system that they trade. But in reality, what ends up happening is one day they're trading breakouts. The second day they're scalping the trades. If they make some money, they'll remove an indicator. If they lose some money, they'll add another indicator. And their position sizing would completely change depending on how they're feeling for that day. So technically, they have 10 different trading systems, but they believe it to be one single trading strategy that they're trading. And when I was struggling and going through that same stage in my own trading, this is a few years ago now, I would also go into this scientist mode where I would just look at a trend line, and a trend line says it's a long, another support or resistance line, it says it's a short, this indicator says it's a pullback, or that indicator says it's a long. And I would just constantly overanalyze everything. And if I would make money on that trade, I would just say to myself that, my analysis was really good and I'm starting to get it. And if I would lose money, I would just go back into that scientist mode, trying to look for what are the better ways to analyze the market so I don't lose money next time and I make money next time. Traders end up analyzing way too many variables. And also another thing about this behavior is that in that moment, we feel good. We feel smart. And if the trade works out, we give ourselves the credit that we analyzed the market and we knew exactly what was happening and we found it and we made some money on that trade. And if it doesn't work out, we end up going back to looking for the nicer way or more reliable or better way to analyze the markets that are going to give us more consistent and better results. But here's the thing. Consistency in trading comes from consistency in process. And if your process is different every single day, your results will be different and volatile every single day. It's not a skill issue. It's not a strategy issue. It's a process volatility issue. Now, here's how to fix it. The very first step would be to start building a well-defined trading process based around your own strategies and your own setups. Setups that you do trade well and setups that you don't trade so well. So maybe you can add it into your own trading process that these are the setups to completely skip. So that is the very first step. And then slowly but surely, you get more and more used to just sticking to your own trading process. That's how easy and simple it is. Just have a trading process based around your own strategy and your own setups that you trade well, and then just slowly just start following that and try not to get deviated too much from it. In the beginning, obviously, we're all humans, and in the beginning, we might just get distracted with other setups and other strategies, and that's fine, but you have to start working towards just following your own trading process. And your own trading process should have all the things that you do trade well, the setups that you do not perform so well, so maybe you can completely skip them, and then slowly but surely you start building confidence and trust in your own trading process, basically. And it's easy to actually build yourself and write a Word document around your own trading process, but the difficult part, maybe difficult, maybe not, depending on who it is and your work ethic, but is to remember your own trading process, right? And it should be so crystal clear in your own mind. Like, if I ask you to tie your own shoelaces right now, you don't have to think about it, right? You probably don't even have to look down at your own feet. That's how easy it is for you to just, put your hands down and just tie your own shoe knots, right? Or shoelaces. That's how easy and flawlessly it should be well defined and also be installed in your own mind. So have yourself a well defined trading process and then slowly start to build confidence around your own trading process and yourself as a trader and your own strategies. Start to build confidence around these things. And that only happens when you just simply stick to your own trading plan. And to give you a realistic picture of how that actually looks like once you get over to the other side and just get habitual to following your own trading plan, I'll just speak about my own example right now that when I am monitoring three or four tickers, my eyes are just not even bothered to seeing anything else that is happening in the market. My eyes are just focused, constantly just hawking all the charts that I have on the screen. They're constantly hawking for those handful of setups that I trade best. They're just looking for that. And I'm pretty sure that a lot of other types of setups are being formed on those stickers that I have on the screen right now, but my eyes don't even register, right? My mind doesn't even notice them that they are being formed or they've already formed and doing the thing. But because I've just trained myself to just look at those handful of things that I trade well, that I can rely on, that I have confidence on putting my money and making it work in the market. So that is what ends up happening is you end up not even thinking about these things, right? These other setups, right? Once you're just so tuned in to just following your own trading plan. And guys, if you're thinking that I do not have a lot of profitable trading strategies, or I don't know how to get started with building my own trading plan, or I don't know what setups I trade best, I don't know what setups I do not trade best. If you want any help, this is the exact same things. I help a lot of traders inside my mentorship program. If you're interested, feel free to check it out. It should be the very first link. It may or may not be for you, but if you are interested, feel free to check it out and learn more about it. But moving on to number two is emotional trading. Now, a lot of traders, if you ask them about the charts, they know all the charts, they know all the indicators, they know all the strategies. They watch like 200 hours of trading education material. And if somebody were to actually quiz them about the entries, risk management, exits, they'll just pass with like flying colors. But what happens is when it's real money on the line, their emotions completely hijack the brain, and they just completely mess up every single thing. They'll hesitate with their entries, or they'll cut their winners really short thinking that what if it comes back and stops me out, or they'll just let the losers run thinking that it might just come back up again. Revenge trading, frustration trading, or sizing based on the feelings, and on, right? They end up not trading the market, but they end up trading their emotional state. Not a single trading strategy will ever survive emotional inconsistency. You could have the most profitable trading strategy from somebody who's been consistently profitable in the markets. You could have the exact same strategy and trade it and get completely different results. Your emotional inconsistency is completely going to mess up even the most profitable trading strategies. Consistency, first and foremost, comes from emotional stability. And that is the very first thing that you need as a trader. And your technical skills and other trading skills come way after that. And that's also the reason a lot of really, really big traders, such as Paul Tudor Jones, even, they end up taking breaks when they're just not feeling in the right headspace, when something bad has happened to them in their lives, or something like divorce or breakup or something. They end up taking a long break because they know that even that they are already consistently profitable in the markets, they're just not in that state where they would see things clearly in the market. So it's just better not to trade. But that being the point, you have to learn how to be emotionally in control in that state where you can start to see things as they are and just execute them as they are. Now, imagine yourself that you walk into your trading desk completely emotionally neutral, right? You are not feeling excited or you're not feeling nervous. You're just completely neutral, and you just walk into your trading desk, do your job, run your trading routine, and that's it. If you make a loss, it doesn't feel any disappointment. It just looks like a data point that my trading strategy produced X result. If your trading strategy wins, it just looks like another data point that, okay, my trading strategy has X number of X percentage winning, ratio or something. And it just produced that sort of data. You're not feeling too high or too low with wins or losses. And that version of you already exists inside you. And in order to tap into that version of yourself, you don't need to be a monk building that ultra high level of discipline or something like that. You simply need clarity. Clarity about your own strategy. What works, why it works, why it does not work, what are the conditions it works. Picture yourself having that level of clarity about your own strategy, right? I have actually said about this in one of my previous videos, right? I mean, we all drive cars, or at least most of us do drive a car, and majority of deaths, apparently in the United States at least, or the second highest number of deaths happen in car driving accidents, right? But none of us, have that nervous feeling about, driving a car, right? Because we know exactly how to drive a car, and if danger approaches us, we know exactly how to hit the brakes, and if we are required to speed up a bit, we know exactly how to hit the accelerator, right? We have absolute clarity on how to drive a car. Maybe not the best example, but hopefully it helps you understand that if you have that deeper level of understanding about your own strategy, your own setups, and your own self, that is what you need in order to not get swayed by your own emotions in the real time. Right now, all your emotions are taking or hijacking your mind in real time because you simply lack that confidence. Clarity about your strategy will lead you to have confidence in your own strategy, and confidence in your own strategy will lead you to execute in a way which is more consistent with your strategy. And just being able to execute in a consistent manner, you executing your own strategy in a much more consistent manner, that is going to lead you to having more consistent results in the markets. Number 3 is data tracking. Now, I get it, you want to find out your own edge, you want to refine your own edge, but most traders, they end up trading day after day after day and never really tracking what's really going on, and never really studying what are they doing in the markets. And if we just go into the markets and we just consistently keep taking trades and never really reflect on them, never really find out what are the best times that we trade, what's the time of the day that we perform the best, what are the setups that work the best, or what is the win-loss ratio stats look like for us, or what are the market conditions that we perform best or our strategy performs best. If you don't track any of these things, you're never going to get any of insights about our own strategies and about our own performance trading that strategy. And guys, talking to yourself about how you performed or what happened in the markets, did you make a loss, did you make a win, just talking to yourself about it doesn't really count. Because how many thoughts do we have in our heads throughout the day, and how many of those thoughts do we actually remember having, right? So we have to do a better job at tracking our performance and also reviewing and studying our own performance and finding out ways that we can improve. For most traders, when they're struggling with consistency, they end up having every single day as a fresh start, right? Because they don't know where they were yesterday, they don't know where they're going, and every single day feels like a fresh start, starting off from brand new, right? And no feedback equals no evolution in trading. And you just simply have to start tracking your own performance and figure out exactly what works for you, what doesn't work for you, what you do best, what you don't do best. And also, here's the thing, when I started and when I was tracking my performance, now I had watched a lot of YouTube content whenever I was starting out my trading journey. I had watched a ton of YouTube content, a lot of podcasts, and I had always been like a data tracker for my trading. But the key mistake that I was actually making is I would rarely review my own trades. And even sometimes that I would end up reviewing my trades, I would do them so half-heartedly that I would just never get any effects from it or benefits from reviewing my own trades. Because when I would just review them, first of all, I just wouldn't review them majority of times. And even when I would review them, I would just, not even take my mistakes so seriously. Now, it's one thing that if you don't know what you don't know, then that's a different story, that you don't know what is the right way to execute your strategy. So that's not what I'm talking about. But if you know exactly how are you supposed to execute it, and if you see your mistakes but it doesn't really register to you while you're reviewing that this is the mistake I did and this is exactly how I need to trade the next time I see this same setup, that's a problem. And that is exactly what I was doing for a really long time when it comes to data tracking and really taking advantage of my own tracking performance, right? So do not do that. Track your data properly and be very thorough when reviewing your own trades. And I understand, guys, like tracking our trades and reviewing our trades is a pretty boring part of the job. And sometimes it could even be frustrating when we're looking at our losing trades or when we are looking at our own trading mistakes. And it could be really painful to go through that, right? But if you don't track, if you don't study what we actually did, there's just no way that we are going to ever be able to improve and get better and become consistent. So we all have to do it. Even when you become really consistent with your trading, you still will have to do it in order to keep on growing as a trader. And once you start doing this, once you start tracking your own trades and really being very meticulous when it comes to tracking your own performance, and it doesn't really matter if you use EdgeWonk or TraderView or any of the trading software, trading logging softwares, or maybe you're just using Excel or anything else, it really doesn't matter. But what happens is once you start gathering data on your own trading, eventually you start building a database of your own trades and you end up having a dashboard, like, right, depending on what platform you're using or Excel or whatnot, but you essentially end up having a dashboard of what are the best days that you tend to have more green days on. Is it Wednesday for you? Is it Monday for you? Is it Tuesday for you? What are the best times of the day that you perform the best? What are the strategies that you perform the best? What are the setups that you perform the best? What are the setups that you do not perform the best? And once you have that data, you can really just pick and choose that this is where I make the most amount of money, this is what I'm going to stick to, and this is where I lose the most amount of money, I'm going to completely eliminate from my trading. Every single profitable trade, doesn't matter who it is, they're all very meticulous in tracking and reviewing their own trades and finding out what works best for them and where are they making the most amount of money and just doubling down on that. And wherever they're not making as much money or wherever they're not performing as well, they're not trying to fix it. They're completely just eliminating it, because there's only so many things that you can fix and work on in your own trading. It's just best to figure out one or two things that you trade well, you perform best, stick to them and double down on them. And these are the three major root causes that keep majority of traders just stuck and unable to achieve that consistent profitability in their own trading. And if you're really serious about becoming consistently profitable, I would just advise you to go to work on these three things and start implementing them on your own trading. And your trading would look completely different in 3 months or 6 months from now. Simply stop worrying about scaling or different or better strategies or special setups. Just focus on these three things now. And if you just do this, I will promise you that your trading is going to look so different from 3 months from now or 6 months from now. If you just go to work on these three things, your trading is going to start feel more cleaner, more simpler, more controlled, just a lot more in the flow and easy. And lastly, guys, if you're somebody who's thinking that I already know this stuff, but I'm still struggling and I don't want to waste any more time or money in the process, and I just want somebody else to look at my own trading and give me a helping hand in achieving clarity with my own trading and show me a clear path to achieving consistent profitability, then feel free to check out my mentorship program. It's a very one-on-one sort of approach where you get consistent feedback and consistent support with your own trading until you become a consistently profitable trader. So if you're interested, feel free to check it out. It should be the very first link in the description below. But that's about it for this video. Like, subscribe, and I'll see you in the next one, guys. Take it easy. Cheers.